How you going there, guys? Just let me know if you can hear me through now. Sorry, I had it on mute. Well, I'm hoping I had it on mute. Wasn't talking anyway. How you going, Jane, Vin? Ah, perfect. There you go. So we're coming through loud and clear. There's no crackling or anything like that today. All good. All right. G'day, Laurent, John. Oh, fantastic. All right, let's rock and roll. Just got the Aussie up here. I'm just having a bit of a look at the Aussie. So, quick recap. Markets overnight were down. They were down in the US, sorry. Not a lot. G'day, Daniel. So, it wasn't a big beating. you would have expected. So, I think the market coming into the open yesterday, say at 8 o'clock in the morning, we're expecting a bit of a thumping because of the spike in crude, and if crude just took off, and there was talk of it going potentially not to 100 straight away, but there's still talk of potentially going to $100 a barrel. All these sorts of stuff had people the nervous jitters, and of course you get these gap up in gold, gap up in oil, gap down. We actually come out not too bad at all, and I think that was the open yesterday. No, sorry, that's the Aussie. What am I talking about? So that was the open yesterday. Opened and then bounced straight back up, which was kind of surprising, to be honest. But I think a lot of people discount the fact that initial reaction is going to be, you'd think, a bit muted, because with crude oil, obviously they've got, like Trump, when we were talking yesterday during the day, he's come out and supported the market, saying we can get into some of our emergency reserves to help buoy the market, which is fine. So I think we're not going to cool that much in oil just yet, because it's still the uncertainty of how long does it take for Saudi Arabia to come back online and keep producing. So I think the hit to Saudi Arabian oil is about 5% of the overall market. It doesn't sound like a lot, but there's not too many countries that have big reserves like Saudi do, or pretty much any that Saudi do. They just pump it out and sell it, and away they go. So I think Saudi Arabia are going to dip into their reserves to try to bridge the gap or take up the slack. And it comes down to two things, I think. Whether things are going to get out of hand is whether or not they take a week as opposed to a few days to come back online, and whether or not things get out of hand between Iran and the US. Whether that creates more uncertainty, more pressure, all that sort of stuff. If there's going to be another bombing. I read somewhere last night that Iran have seized another tanker. I'm not sure. I haven't really had a look for it this morning, but it popped up on my phone from news.com. So if anyone knows sort of more information about that, but if this sort of thing kicks off and they start doing things like that to pressure price higher, then sooner or later the market's going to take it upon itself to rally, and it's going to get the jitters, and then any minor news detail that's negative, they're going to pop, and anything they do to try to buoy it is not really going to work. When the market turns from rational to irrational, rational's where, okay, let's think about this clearly. We had a big pop in oil last night, but then the US come out and they're reading the news saying, oh, yeah, concerns are that oil's going to go nuts, but I don't think that, because they're going to come back online. Now, if there's more things to get people to start thinking irrational, and they start chasing the trade, because every time some news comes out on Iran, the market pops, then everyone's going to be looking for that. And they're just going to hit the market, and then it turns from sellers are going to start to disappear and buyers are going to start to pile in, and the market's going to get a bit of a trend on, and that's where it could start ticking higher to, there's 65s I've found as the next sort of not key resistance level, but there's the next resistance. Let me just show you what I'm talking about. Now I've got to get to a daily. So is really this level up here, 66, 67, well, probably $66, is that next zone where we could get a reaction lower. But it looks to me, just off the daily, this thing could easily extend. It's only a few bucks away, really, and we could do that in a session. It could blast through there, and then you've got the next zone is sort of up towards, you'd hesitate, it's around up here, 76, but then if you break it down, it's broken, a key trend. So it's looking a bit messy. So you've got this level, All right, so if it gets through there, then I think the bulls are on, because once it gets through there, it's sort of broken this downtrend, this longer term contraction. It may not have been, like, I think it was going to do that eventually, but I don't think it was due just yet. So we've got a couple of levels to get through, say around 66, then up towards 75, 76, and then it's a bit of a free-for-all up to 110. Now, if you've got a market that's turning irrational and they start getting through these levels, when they're looking for, a trade 2 to 1, 3 to 1, they could be looking at something 10 to 1. So any trader in their right mind's probably going to take a setup long. And if it's irrational, you would get the lack in selling. So it's going to be that euphoria. And I don't know if anyone remembers this. I was trading this with options, this big spike here. And to be honest, it was quite easy. It was, easy to some extent because markets just were going nuts. And it was easy to get on the right side because you didn't have to wait long till you get on the right side of the market. So that is the potential. And if that starts happening, you can kiss equities goodbye for a while, I'd say, because you're going to get all those input costs are going to start to get factored into growth, and it's going to really pressure the market. So the last thing Trump wants for his 2020 election is oil to get out of hand on the upside. And if it does, so they've got to take all the sort of steps to, and you can see by his tone last night, talking up, okay, we're going to supply with our emergency supplies, we're going to bring out oil, and we're not interested in a fight or a war, all this sorts of stuff. Yet he does come out on the flip side saying they're ready, just, I guess, rubbish Trump stuff that comes out of his mouth sometimes. But realistically, I wouldn't think he'd want to go down that track because you might get crude start to kick off. But we'll have to see how it goes. So that's my take on oil. You've got the markets just opening down at the moment. We're looking to open down about 20 on the ASX. Just by this open, there's a bit more weakness coming in. But on the open, say at 950, you tend to get the market on the SPY flush. It will flush a bit. I don't know where. Let me just get to Wall Street. Wall Street really hasn't done too much. Just get to it hasn't done too much since it closed, so it's sort of hovering around where it closed overnight. Longer term, it's right up in that zone that we're talking about. It's sort of pumped up in that zone. It's just backing off. Whether this is a catalyst for some selling to start to come in from that liquidity zone up there, I don't know just yet. We'll have to wait and see. If it starts breaking down below 2,700, say, then I think you've got a lower high, at least on the hourly chart, coming into play, and that could mean that you get this extension from your take. Let me just show you. Just do this. If you take sort of that extension from the highs I'm talking about to this low, and you measure that out, we're looking back to sort of this liquidity zone back in here, which is fair enough. And that's going to be, it's really only a few hundred points, to be honest. So that's not going to be a major sell-off. If we start really plowing ahead, you can start looking at zones down towards 25, 2600, which is, 1,000-point drop on the Dow. And again, one bad night or a couple of bad nights, it's there, the market's there. So and you're looking for something similar. This kind of action, once you got off the highs, just piece together what we're seeing at the moment. The trend is up. I understand that, but then you've got a high, and if this is the high, that's not conducive to too much strength. A little pop through the high before you get a pullback. So the correction's deeper than the actual breakout. All right, and that's not strength. That's a washout, and then you get it washing out again slightly by this. You can see this high. Oh, that was pretty bad. You can see what I'm talking about. So that washout before you get this sort of correction, and then you get. Now we're seeing the market grinding up. Now to me, that's not strength. That's like what we talked about a lot on the ASX when you got that breakdown, then you got this grind up. That's not what you want to see, a good sort of a breakdown, and then the market sort of grind its way up. That's not strength, because sooner or later that strength turns into weakness and you start to accelerate. So anyone that's been buying in there, what you've got are people who pretty much didn't get out, for instance, didn't get out with this sell-off, are still holding, and they might take the opportunity to get out, or they're waiting to see if we can get back to where we get back to break even, and what's going to happen. So that might grind back up, and as soon as the initial sign of weakness, they start bailing, and then you've got all these buyers built up as well. So they're going to bail, they're going to sell it into the market, which could easily drive it down, and then you've got other people that are going to sell on the break, potentially because they're looking for further weakness as well. So I think that's not a sign of strength. That doesn't let me believe we're going to get this extension up. But then again, we've seen it before, but we haven't sort of seen the extra headwinds of oil. It all comes down to what oil does for me, to whether we just keep grinding higher or what. But that's potentially, there's similar type of action. that could be potentially finding a lower high here. I mean, if we go down through now, 27, just drive lower, then it's about a 100-point drop from here. We're going to have a bad day, I assume, today. Not too nice anyway. And you've got similar action. We're getting capped at a lower price, potentially at 12.4 on the DAX. That similar type of action. It's holding higher lows, but it's coming into some selling pressure, and you can see that selling pressure starting to push the market. And it hasn't cracked yet, but it looks like it's got the potential to crack down. Probably the UK. UK's more choppy than anything else, but that's not really bullish action. That could be corrective, ready to pop higher, or it could just be getting it creamed. We don't know just yet. Gold, the thing is, gold did pop. We got this pop. It's backed off, but if it can start to find support in this zone, higher than the lows at around 4 to 1480, say 1485, 1490, above 1490 for instance, and we start to lift, then that could really kick on through the highs at 1524. So there's still some there was some safe haven buying last night. You get people easing out of equities a bit in the US and jumping into gold, jumping into bonds. Yields dropped, which means they're buying into the US dollar as a bit of a safe haven hedge. Only because they're sort of preparing. You got trade wars. Nothing's really come out in the back of trade wars yet. Nothing's been solved. They're just talking it up. And they've done that many times in the past. They've talked it up. The market's gathered some steam. Then they've come out and said, nah, we're going to raise tariffs. Bang, market sells off. So they haven't done anything there. Then you've got, on top of tariffs, you've got oil, which we're always looking at growth. And higher oil prices, higher for longer, is going to crimp the retail investor in, not retail investor, but what do you call them? In the US, what are they called? Your general buyer of goods and services and things, because they're going to have less money to go around. Higher gas prices, higher oil prices, higher energy prices, all these sorts of factors on higher oil, all go into your input costs for general everyday living. And once they start going up, there's less money going around to spend on goods and services like your new cars, your new this, your new pants, jeans, outfits, makeup, all that sort of stuff. There's less money going around, which means retail takes a bit of a slug, and the overall economy, because the one areas that's keeping them up is consumers. And if consumers have the crimp on higher energy prices and things, they're obviously spending less. That consumer support is going to start to deteriorate, and I think they're going to start to factor that in quite clearly into economic growth. And you can see that a bit of easing out of some risk overnight. So we'll see how it goes. I mean, there's a lot of ifs and buts there, but we'll just see what happens. Now, the Aussie, we talked about that. You've got you've got a good liquidity zone up here, and you've got a potential for a lower high to build. And if that's the case, we could just say we're getting a move down like that. It could be a push down to sort of, 68.40 in search of more liquidity. Or it could find something a bit earlier. You've got this zone through here. Just get rid of that. Sorry, it's all these numbers you've seen is when I've just marked up some trades, and save it for files. What I was talking about in the past. Good idea to do. Anyway, we're getting sidetracked there. But you can see on the Aussie that could easily play out down here now. At 11:30, we've got the RBA talking, so it could be that they're just positioning themselves for, maybe some more weakness into the Aussie because of the RBA statement. We'll wait and see. But either way, that to me looks a bit more bearish than anything else. It is got some potential support around 68.50. Now, if it plows through that, you don't have anything major. Your major corrective zone is way down here at, say, 66.85. And that's a bit of a long way to fall. We could just plow down, have a good pullback of this leg up. We talk 1/3 to 2/3, or you can look at your Fibonacci levels. Fibonacci of that level up, or 1/3 to 2/3, is going to probably take you somewhere around, let's just take a guess, somewhere around here, between 67, that's probably not 1/3, that's a pathetic 1/3, isn't it? Maybe something more like into this zone, and that sort of thing is just a rough guess. If we're going to have some sort of retracement of a leg up, when the market's strong, you're looking at a 1/3 retracement. The market's weak, you don't want anything sort of over 2/3, because then it ends up being a full retracement, and that's not a strong market at all. But just your average market can pop into this zone and start to hold a higher low and then get another major leg up. But either way, there is a potential on the sell side. Is a bit 3-bar counter trend. How is it 3-bar counter trend? You mean these three here? Potentially, if that's what you're talking about. So what I'm seeing here is this is quite a strong move down. You can see extension bars. You've got a green bar here popped up. That's your safe. That's your punters trying to buy off that support. That was blown apart when you got this big expansion bar here, expansion on the way up. Now on the reversal, when you got this reversal of that trend, or people starting to lock in some profits as it gets extended, a couple of green bars, red, green, then you got a couple of red bars. So you got your first sort of pullback, then you got a pop, then you got another pullback, and you got basically a double top here, a minor double top. The trend is down on the hourly, or 30 minutes, sorry. This recent trend's down, so really what you could be looking for is that one, that's your correction, two. And we're looking 2 major legs, and if it's 2 major legs, then we're sort of looking for, in my eyes, I would be looking for something from here. I mean, I just stick to the same rules. If you've got this sort of, say it pops up here, well, it does this sort of thing. You want something potentially like that. Then you've got your lower high coming into play. And that lower high in comparison to that is showing weakness. And then that for me is like the start of, and you can minimize your risk, the start of your secondary major leg down, if that makes sense, guys. But anyway, that's what I'm probably looking for. And then from there, it's just managing risk. You know what happens, you don't expect it to play out where that from high to low, and that's your high, and go all the way down to, what do we say? I say somewhere around 68.30. You just got to manage your risk, because anything can happen after that. If you start getting the market falling short around here, 68.50, and you're short from 63, you can probably book your 10 points. But if not, if we get major weakness coming, because all this could be leading to some major weakness where you get your 1/3 to 2/3, then you've potentially got a 50, 60, 70 pip trade up your sleeve. So that's how I should be breaking down my entry potentially, because I'm looking for this to be a lower high. It hasn't played out, and if I get a major lower high, and then you've got that inside lower high coming into play to minimize your risk, that might only mean 5, 6, 7 pips of risk on that for a potential of maybe 10 or maybe 50. That to me is not too bad odds. And you're just really trying to play out. If this plays out, then great. And you can get a good run on it. I mean, who's to say that's not going to come all the way back down to retest these lows at 66.85? And then you're looking somewhere around 250 to 200 pips. So there you go, guys. That's what I'm just looking at there. That's about it. Let's just see where the ASX is open, and we're probably where it's opened. Down 17. So that's about in line with what we're talking about. Where's the SPY just ticked off to? And it's interesting to note. So we've got, the SPY's popped down a bit. No, we're expecting down 10 points, weren't we? I think roughly 10. And it's down to 17, so that's probably why the SPY, that's, in that respect, you expect the SPY and the ASX to be roughly in line now. You don't really, because when you're coming into 10 to 10, like we said before, about 6 minutes past 10 or 7, if the ASX doesn't look like it's going to open down, then you can look for a pop in the SPY. Or vice versa, if your SPY's not really moving and sellers are happy to keep it there, then you'd expect the ASX to open down a few more points. But when you hit 10 past 10, they're roughly in line. So, then you're trading the SPY by itself, not really looking at the ASX as such. You're trading it purely on the back of, the SPY price action. All right, guys. Any questions just while we'll be discussing? We'll probably call it a day there. Been about the 20-minute mark, but yeah, let's just pop over, sorry. This is the 5-minute chart. You've got this congestion through here, you've got more consolidation through, and you're potentially holding a lower high just in here around the 66.75. You can probably see it around this zone after that spike up, after this high. So to me, that's looking a bit more like weakness, but it's not. There's potential weakness. It doesn't mean that you've got this sort of chop through here. More it's consolidation. It's hold by a low, a higher low, and then potentially another higher low. But then you've got a lower high, potentially another lower high. So to me, that's more contraction between the bulls and the bears. It's not any one side taking control over the other at the moment. So we'll just bear that in mind. But the daily, click onto the daily, you've got, look, in all honesty, it looks like you're getting this rejection here. You've got an inside day here, pretty much flat session yesterday. That looks like it could be due for a bit of a pullback, and then see what happens. For it to keep, and what I'm looking for here is when you get this expansion and then contraction. So that expansion is quite good. quite hard. Good positive day. Come straight back down. Another couple of positive days, but the range of those days weren't quite as hard. The next range of the next 3 days are a lot narrower than what you've got at the start. So that's, to me, is running out of energy on the upside. So it could go higher, but I think the higher it goes, the more likelihood of a bit of a correction comes into play. And you just got to bear that in mind. So it is stretched up here. And the weekly, where's the weekly? The weekly looked at could roll over easy. So yeah, I don't want to be bearish, but at the flip side, I don't really want to be diving in left, right, and centre. We got into a few yesterday, so we'll see how they're going. But yeah, I think we're evenly hedged. We've got a gold trade, we've got a short, we've got a couple of longs, so which are holding up. We've taken profit on one. We'll just have to see how it all goes, how it all pans out. I think we're relatively got some exposure each way. We're not loaded up long to the hilt, and if we don't do correct, we're going to get smacked. We're going to take some money out on, I'd expect, gold and the short if the market gets smacked a bit, and the others, if they're placed well, could hold up better. And if there is a good rally, continues to rally hard, I think we've got a couple of longs going to take advantage of that. Anyway, we'll just see how we go today. Just the last thing I want to touch on is that SPY. Look, could be driving down to this low at 60.42, another 10 points, or coming down to test this low at 66.34. It looking extended here. So I wouldn't be buying it here, but I'll just be keeping an eye on it. If we do pop and hold a lower high, then that would be a bit more concerning. I think that would lead us to a bit of a sell-off and push lower. So if we do this sort of thing, pop up, and then start getting sellers coming in, I'll be looking for a potential sell into that. But again, we'll just have to see what sort of action we get range bound, or we're starting to get some sellers piling in a bit at the moment, but really nothing to be too concerned about, purely because you've got this capped at high at 66.86, and then you got lows around 34, potentially up to a support zone around 42. All right, guys, thanks very much for joining me. We'll call it a day there. Have a great day, good luck, and we'll speak to you again tomorrow morning. Also, I'm going to ask if you like what you hear. If I'm not talking rubbish, then leave a like on the YouTube channel. We'd much appreciated. All right, guys, enjoy your day. We'll speak to you again soon. Bye.